Good afternoon and welcome to ASEAN Midday Market Watch. Our guest today is Kelvin Wong, market strategist at CMC Markets. Kelvin, it's always good to have you on the show.
Yeah, it's my pleasure, Brian. Good afternoon to you. Yeah.
Now, before we get your insights, Kelvin, let's take a look and see how markets are performing across the region. We'll start close to home with the SGX. It's at 3,211.94. It's down 0.08%. Bursa Malaysia is at 1,684, 600 and 0.84. It's down 0.36%. Now, across the region, we've got the Nikkei at 29,092.16. It's up 0.35%. Shanghai Composite is at 3,441.1. It's down 0.04%. The Hang Seng is at 28,978.49. It's up marginally at 0.13%. ASX 200 is at 7,066.1. It's up 0.46%. Rounding up the numbers, we've got the Kospi, which is down 0.79% at 3,189.97. Now, Kelvin, what's the view on markets across the region? They seem to be struggling for direction.
Yes, definitely. So I would say that if you look at the situation right now for our local regional markets, it's more like a consolidation mode. Why? Because there are actually two major events that are coming out later tonight or early morning Asia time. One will be the Federal Reserve FOMC meeting, pardon me, followed by the about half an hour later at 2:30 a.m. will be the Fed Powell usual important press conference. And as well, after the close of the market, the US market, so we're talking about after about 4 a.m. plus Singapore time, will be the release of the latest earnings result, Q1 results of these two US mega tech companies, Apple and Facebook.
Okay, and obviously markets are looking to those two events, earnings as well as the FOMC for direction. But the expectation for the FOMC meeting, Kelvin, is really status quo, isn't it? No movement.
Yes. So if you look at this time round, the FOMC meeting, there'll be no release of a dot plot. What's dot plot? That means the Federal Reserve economic projections. Okay, so there'll be no release of dot plot. So in terms of the outcome, yes, definitely status quo. So no change on the interest rate at 0%, the Fed fund rate, and also the amount of bonds that Fed is buying every month, which is at 120 billion. That's the quantitative easing program. So what market will be scrutinizing will be the Fed Powell speech later not speech, pardon me, it's the press conference later at 2:30 a.m. So market participants will be looking for hints or guidance of any signs of tempering. What are the data they are looking at that will actually warrant tempering? Why? Because if you look at since the Q4 last year until now, we see significant improvement in US key data points. Like we're talking about manufacturing data, ISM data, we talk about consumer sentiment, and even the labor market has been improving significantly. So markets are actually watching for any signs or guidance from a Fed chair. What are the data points they're looking at to actually warrant this, we call it tempering of this ongoing 120 billion per month purchases, yeah.
Now, as we talked about, the all eyes on earnings, especially for Apple and Facebook, particularly because Alphabet blew expectations out of the park. Microsoft expectations were also good. But what is the market expectation again on those two stocks? And as well, closer to home, Kelvin, we've got the likes of DBS announcing their earnings on Friday, as well as the two other major banks who are announcing their results next week.
Yes. So maybe let me touch on the US earnings first, which is Apple and Facebook. Then very particularly, Apple is pretty much of interest. Why? Because we talk about Apple is the biggest market cap stock, one of the heaviest weightage in these two major US stock index, which is the S&P 500 and the Nasdaq 100. So if you look at the S&P 500 in the last two sessions, it has been trying to break past the current all-time high at 41.94. So yesterday it tried to push again, 4194, but closed slightly lower, about 4180. So definitely the earnings from Apple later at the close will actually determine whether in the short term can S&P 500 break above the current all-time high. And what market expecting for Apple is actually at 0.99 EPS earnings per share for this the up and coming quarterly earnings release. It's actually up pretty much significantly, 55% year on year from a similar quarter last year, which is at 0.64 EPS. So what markets are actually pretty much concerned? If you look at Apple, right? Apple products are being sold worldwide, especially their iPhones. And so they're looking to see, is there any significant signs of improvement in their global revenue? So if that comes to place into picture, two things it represent. Number one, it represents that the global economic growth is indeed recovering from the pandemic fears or the pandemic downturn that actually happened last year. And also, if we start to see in the point that especially in the face of the regional increase, where does it come from? Does it come from Asia or come from the various part of the world? Because we're talking about Asia itself, Apple do have a significant revenue contribution.
Yes.
All right. So if that turns out to be relatively positive, I could potentially see Apple share to actually inch relatively higher from this level, which means, i.e., the odds of the S&P breaking above 41.95 seems to be quite high if everything turns out to be rosy on the Apple earnings front. Yeah.
Okay. Okay.
Yeah. So that. Yes. So the next one will be DBS, definitely. So DBS itself is actually the heaviest weightage stock inside the Singapore STI, the Straits Times Index. So if you look at the Straits Times Index, has been the regional outperformer, I would say, just below maybe the Taiwan TAIEX. So if you look at the STI, right, it's now actually holding above a key short-term support at 3150, which is also above the 20-day moving average. So what I'm going to see over here is that if DBS is able to actually meet expectation, and the next thing that investors or traders are looking at will be the loan loss provision. So if they start to reduce their loan loss provision, that means it means that the banks is pretty much confident on the state of their the corporate loan books and even their retail loan books. Because if you look at since the last 3 or 4 quarters, loan loss provision has been set aside pretty significantly as a buffer for this uncertainty that's being induced by this pandemic downturn around a year ago. So so I'm looking at 3150 support on the STI, near-term support. So the intermediate resistance will be at 3285.
Kelvin, once again, thank you very much for your insights.
Sure. Thank you, Brian. Yeah.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets, on the BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out our Facebook and LinkedIn sites, as well as our website, www.biztech.asia. Please subscribe and like our various platforms. Thank you very much for watching.